News coming in from the Adani Wilmar Group, which has posted numbers for Q3. In fact, the company has delivered its best ever quarterly performance for the third quarter of FY25, with net profit surging 105% year-on-year to 411 crore rupees. Now that, as compared to 200 crores, is a substantial increase from the same period last year. Revenue of the company has grown by 31% year-on-year to over 16,000 crores. To be precise, 16,859 crores, and that marks the highest quarterly revenue for the company. The strong top-line growth was supported by a 5% rise in underlying volumes despite inflationary pressures. And to give us more details of the earnings fine print and, of course, the growth path for the company forward, we are now joined by Angshu Mallick, the MD and CEO of Adani Wilmar. Thank you very much, Mr. Mallick, for joining us here on ET Now.
Thank you.
Now, Mr. Mallick, during the quarter gone by, the company has seen a mid-single-digit volume growth of 5%. What is then the outlook that you have for the company in terms of volumes in FY25? And can we expect this number to inch back closer towards low double digits?
The volume growth in Q3 was subdued as compared to the 9 months period. That is only because the duty hike in edible oil led to abrupt increase in prices, and then the inventory was consumed by the retail. As a result, the primary sales were low. But on a YTD level up to December, we have grown by almost 11% in volume, and I am sure we will close at double digit by March.
So you have big expectations, and you're saying that by March you will again bounce back to double digits. But let's elaborate a bit more on the impact of palm oil price fluctuations is concerned on your edible oil sales. How do you plan to navigate the potential price volatility in future, and particularly in palm oil, while maintaining growth in this segment? And any price hikes that have been undertaken?
Palm oil has been a difficult oil, although it has always been the cheapest oil, but last 6-7 months, palm oil has been the most costliest oil, and even costlier than sunflower oil. Luckily for Adani Wilmar, we have 4 oils in our basket, which we play around. One is mustard oil, soybean oil, sunflower oil, and palm oil. In all of these oils, we are number 1 or number 2 in each of the categories. So it helps us to navigate price as well as volumes. But when it comes to industrial application or bakery or frying industry, obviously they depend on palm oil. And we have a reasonable portfolio of palm oil, and we do supply them. Price fluctuations are inherent in any commodity, but palm has been a little more fluctuating. But luckily, we have been able to pass on the hike or even the reduction in prices. And we have very stable buyers, and all the premium buyers in the country are buying from us. So we have assured business from them, and there isn't any much of problem. But a basket of oil helps us in navigating whichever oil is cheaper and whichever oil we can substitute.
Okay, Mr. Mallick, but do you plan on taking potential price hikes?
See, price hikes in edible oil has been a normal phenomena. Whenever the price goes up, the market gets accustomed to it, and we can easily pass on the price hike in a gap of, say, 7 to 10 days. And that has been a standard practice. And the market also accepts that if the market goes up, they buy at a higher price. So that is an acceptable phenomena. Whenever there has been hike, we have passed on.
Okay. And currently you get more than 70% of your palm oil from Wilmar International. Now, post the JV exit, what's going to be sourcing, and how is it going to look like? Because HUL recently acquired a domestic palm undertaking. Are you also going to be doing something along similar lines?
See, as far as the JV is concerned, it is Adani and Wilmar. Wilmar is going to continue and going to manage the company going forward. And Wilmar is number 1 palm oil player in the world. So we buy a substantial quantity from Wilmar, and we will continue to do so. But that also leaves us open to buy from any other region or country or any other buyers who want to sell. We are open, and we do buy some quantity from outside also.
Mallick, how does this really impact or affect your strategy in the food and FMCG space going forward? And will you be looking to pursue new partnerships or acquisitions in this sector?
The food and FMCG has been our main thrust and focus area for the last 3-4 years. Year on year, we have been growing at over 20% per annum. We believe that India will consume better and better packaged foods, more hygienically and healthier food. And India today consumes much lower volume of packed food, particularly when you look at sugar or rice or wheat flour or even pulses, besan, and spices. All these products, you will find that hardly 15 to 30% is branded, 70% is loose. Other than oil, where still 80% is branded, food is generally not branded and sold loose. So anybody who can provide good quality product at value for money and can have excellent distribution reach will win this game, and we are concentrating on that.
Okay, and one final question, Mr. Mallick, before we let you go. What are the kind of announcements that you're expecting to see for the FMCG space in the union budget?
I think the most talked about issue is that financial stress of the middle income people, and that is why the urban middle class has not seen consumption growth. Now, you will find all the FMCG players have mentioned that urban middle class is surely under financial stress and needs some kind of support. The rural consumers also equally need some kind of support in terms of income increase or better incentives given to them. Government spending has been low in the first half of this year. And I think going forward, the government spending, which is very critical to providing money or to the system, will be there. Some amount of incentives is likely to come up in the budget, which will help the middle class and the rural poor to get some extra money in their hands, which indirectly will boost up consumption. And we always look for extra money in the hand of consumers because food is the first thing that they would buy. And we are in the essential food basket. And hence, we look forward to any extra money that consumers have will surely first go to food.
Absolutely, Mr. Mallick, and that consumption boost is something that many industries are expecting on the back of a slowdown that we've seen in the sector. On that note, thank you very much once again for joining us here on ET Now and sharing your perspectives and, of course, decoding the quarterly numbers for Adani Wilmar. Thank you very much.
Thank you. Thank you, sir.